Hello, and welcome to another edition in the PERL Eco-Carbon Markets Education Series. In our previous video, we looked at the timeline and stages that a carbon offset project must go through before credits can be issued. You will now hopefully understand that the development timeline is years, not weeks and months. And also, implementing all of the various stages cost the project developer a lot of money, and there is no money coming in from carbon credit sales until the process is completed. So where do carbon offset projects find financing? For many nature-based projects, their only hope of receiving funding is through grants and philanthropic organizations that support environmental conservation and climate change mitigation initiatives. These grants can come from government agencies if the government where the project is located has sufficient resources, but too often the environments most in need of protection are in some of the world's poorest nations. Funds may also be available from non-profit organizations, foundations, and other charitable entities. But are we really leaving our future up to the goodwill of a few generous individuals and organizations? Another source of potential funding are development banks, such as the World Bank and regional development banks, who can provide financing for nature-based projects. These institutions support sustainable development and may offer loans, concessional financing, or technical assistance to eligible projects. Applications to these institutions can be highly bureaucratic, requiring many forms to be completed, and there is no guarantee of a positive outcome. Some governments and public entities, outside the country where the project is listed, may offer funding programs specifically designed to support nature-based climate solutions. USAID would be an example of this type of potential funding organization. These programs can provide grants, loans, or subsidies to projects that contribute to biodiversity conservation, ecosystem restoration, and carbon sequestration. However, similar to international development banks, the paperwork requirements to achieve this type of funding can be onerous, and very few carbon projects are likely to be of the scale and prestige to attract foreign government support. Some corporations that recognize the importance of addressing climate change may invest in nature-based projects as part of their sustainability strategies. These investments can take the form of equity investments, direct funding, or partnerships with project developers. German auto manufacturer Volkswagen recently announced its intention to become directly involved in carbon development projects to meet its own offset requirements. The more common route for project development finance flows through impact investment funds that focus on financing projects that generate positive social and environmental outcomes alongside financial returns. These funds specialize in climate-related projects, including nature-based CO2 avoidance initiatives. They provide capital to projects in exchange for a share of equity or a takeoff from the carbon credits that will eventually be issued. These investment funds have a positive impact for carbon project developers, and this is a good thing, but there is always a but. Investing in these funds secures an opportunity to benefit from carbon markets, which are forecast to grow significantly over the next 30 years. These funds are open only to some investors. Retail investors have few options when it comes to funding carbon project development. For DeFi and crypto investors, the opportunities are even more limited, mainly due to action from regulators. There have been examples of some nature-based projects resorting to crowdfunding platforms to raise finance. While a worthy efforts and good idea, traditional crowdfunding platforms, where individuals contribute relatively small amounts of money to support a cause, struggle to raise sufficient funds. These funding needs, coupled with the enhancements blockchain technology can bring to carbon project development that we covered in an earlier video, is key to the strategy PERL Eco is implementing the PCX and PFCs. PERL Eco Future Carbon, or PFC, is a fractionalized future delivery contract for carbon credits from a project that allows a project developer to raise the finance they need to develop the carbon credits. The PERL Eco Carbon Exchange allows the PFCs to be listed, traded, and ultimately, for the custody of carbon credits to be transferred to investors in individual projects. While PCX will be limited to institutional and/or qualified investors on launch, PERL Eco is actively working with regulators to explore opportunities to facilitate retail investment on the platform as part of future enhancements to the exchange. Investment in carbon project development is vital in achieving our net zero targets. There is a huge funding gap to bridge, and meeting this challenge is core to our strategy. This is the final video in the general information content within our Carbon Markets Education series. If you have watched all the videos, you'll understand a lot more about carbon credits, why we need them, how they are issued, what makes some carbon credits more valuable than others, and you will hopefully know more about the various standards and bodies that govern the whole process. In the more recent videos, we have covered how blockchain technology can contribute and enhance the voluntary carbon market. We have hopefully given you a sense of the scale and timeline for developing a carbon offset project, as well as explained the challenges in attracting funding for the various development activities. We are not done with educating and informing our community, but we are transitioning to a new phase where we will be explaining how all of these future carbon credit efforts ties back to the PERL and how they will impact the PERL community. So please subscribe and hit the notification bell to be informed when the next phase of our PERL Eco Carbon Market Education series kicks off.